I'm Ron Zalben. I'm a U.S. and Israeli CPA, and I've been practicing for almost 30 years. And I deal mostly with the U.S. side of things when helping people deal with their U.S. compliance and their planning needs, as
I'm
well
Doug.
as their Israeli needs as well.
I'm Doug Goldstein. I don't do taxes. I work on the investment side. I work with people who live in Israel and who have U.S. brokerage and IRA accounts. Generally, it's the type of people who've made Aliyah, and the joke we always make is that they have dedicated their lives to Israel, but not their money. So that's where we jump in. Okay, so why don't we just sort of talk about the overall structure for today? I think what we'll do is I'd like to go over a number of issues that I see when I'm working with clients who live in Israel who are having some troubles or some questions about their U.S. accounts, and then we'll talk about the tax side of it because that way we'll cover pretty much everything that anyone needs to know, and then we'll deal with some questions if anyone has, and wrap it up there. How does that sound?
Sounds great.
Okay. So I just want to dive in with one of the issues that I really deal with a lot, which is the fact that a lot of Americans living in Israel are discovering that their U.S. bank or brokerage firm no longer wants to work with them because they live in Israel. They get what we refer to as the Dear John letter. It says, Dear John, even though you've been a great client of ours for the past 20 years, it turns out that because you no longer have a U.S. mailing address, we are no longer going to work with you. And therefore, you have 90 days or something like that to transfer out to your account. And then people end up being in a huge panic as a result of this. So that's one of the biggest problems, I would say, that we are dealing with in Israel for people with their U.S. brokerage accounts.
Sounds absolutely insane that the investment brokerage account wouldn't want to keep them.
Yeah, so it turns out that the reason that they often say is because they're not licensed, which probably is a good reason. But I actually think that the main reason has to do with the Patriot Act. After 9/11, the U.S. government made a rule that said that any bank or brokerage firm that is complicit with people doing money laundering or illegal arms sales or funding terror, that's a criminal action, which makes sense. But even if you didn't know about it, but you should have known about it. So a lot of companies in America who don't really deal with or know much about international living, they often say, the compliance officer there is going to say, why do I want to even worry about this? I could literally be liable for a criminal offense if some guy in Israel wires money and he's a terrorist. And of course, for a lot of people in America, they don't understand Israel from the rest of the Middle East or from the rest of the world for that matter. And they just don't want anything to do with it. So they are literally closing out the accounts. Wells Fargo, which is it's a major bank, they shut down about $40 billion worth of retail client assets for people who lived outside the United States. It was unbelievable what they did. And I can't say all $40 billion worth of that money called my office, but we got calls all the time from people saying, Doug, you'll never believe I just got contacted by my broker at Wells Fargo and I have to close the account. And I always said, yeah, actually, I would believe it because you're the third call I got like that this week. But luckily, there's a solution. In other words, when you work with people who live outside the United States, and that's all you do, so in our case, we're licensed both in Israel and the U.S. The compliance officers that specialize in cross-border clients are familiar with the licensing issues, the regulatory issues. They know what investments you can get involved in. They're able to open an account. And again, in our case, just because we're here, we can literally sign off on opening the account because we can do what's called the KYC, the Know Your Client. We can literally, as the advisor, we can sign off on that, and it's not a problem. So that's I think the number one concern that we see in this office that people have is simply that they're told or they feel like maybe it's illegal for me to have a U.S. brokerage account when I live in Israel, and that's just totally not true. I assume you're on board with that too, right?
Yeah, absolutely. I'm just curious, why are these folks in the States closing, and the folks that you work with are happy to take these folks as clients?
So that's a good question. There's sort of like a small niche of what we call broker-dealers, brokerage firms that deal with the international market. A lot of times they're dealing with South America, or they're dealing with the Far East, or dealing with Europe. So our partner in the States is our broker dealer in the States is one of these firms that I don't know the exact number, but it could easily be 90% or more of their advisors and their client base are people who live outside the United States. So it's true, you have to be extra vigilant. You have to really get to know your clients, but traditionally the whole banking and investment industry has been based on relationships. And it's not based on, oh, log in and sign up online and trade, which creates all sorts of problems. But when a broker or a banker or a brokerage firm can say, I know this guy and I'm going to sign off on his wire to transfer money, or I'm going to sign off to open his account, that's how we do it. So it's really because of the relationships that we develop and then our brokerage firm develops.
Sounds great.
Okay, another one of the topics that I wanted to just touch on was an area that people have trouble with is related is how do they figure out who to work with? And one of the problems that I'll also tell people is you need to work with someone who understands your situation. And even if you do have a good relationship with your advisor, your investment advisor, or in a little bit we can talk, the same thing applies to accountants with your accountant in the States, and he may be the world's greatest US accountant. If he doesn't understand what it means to live outside the United States, and nothing against these advisors, they don't deal with it. So they don't, they're not the type of person who's dealing with the tax treaty every day or the brokerage issues every day. So you're like the special case. And I don't think you ever want to be the special case in terms of handling your money. You want to be just like everyone else. If your advisor knows exactly what's going on, your tax professional knows exactly what's going on, insurance guys know what's going on. But it leads to really good planning. And even though I'm a financial planner and I'm a big believer in financial planning, I think one of the questions you need to start with, and sort of where we started our conversation today, is do you need a financial plan, or do you just have to get to work with dealing with the money? So if anyone out there is also a financial planner, please, don't take what I'm saying as the gospel, but not everyone needs a financial plan all the time. A lot of times there are just some basics which you have to get taken care of, which is get your account set up properly, make sure it's in your name, make sure you're not lying about your address, telling the IRS, oh yeah, I live in New York, or I live with my brother in California, which everyone knows isn't true. And by the way, when these states are like going broke, they're desperate to get taxed. They're desperate to get the tax. So if you've written that your address is California or New York, I mean, again, Ron, this is your space, but is this something that people know?
Oh, absolutely. I can tell you from New York and California, they are the two most states that are looking for money, and California is number one for sure. They'll send notices if you have an address in California, even if it's your relative, they will send you mail saying, where is your tax return? Because they're getting information from the brokerage. Wow. The brokerage firm, and New York is a close second. And there's some other states out there as well that are excellent and knocking on your door saying, where's my return? Because they think they're due money.
And I assume it takes some time for you to deal with this to hopefully make it go away, right?
Absolutely.
Yeah. And
it's annoying. It's annoying and it's time.
And with all due respect to you, who wants to pay his accountant just to deal with a state that's being annoying to you, going after tax that you don't really owe them? It just creates problems.
Correct. And honestly, that's not the way I would want to spend my time either.
Yeah, I taught a course for a university in St. Louis, Missouri. I taught their MBA course, and as a result of just teaching that course, the state of Missouri went after me for taxes on my investments, which have nothing to do with them whatsoever. Maybe because I was teaching, but I wasn't even there. I never stepped foot in the States. And that was a big deal to have to deal with that.
Yeah,
so again,
it's a hassle.
Good thing to have a good accountant to take care of it. Anyway, back to the financial planning issue. The question is really whether you need to do that. And I think, again, I believe in planning, and all investments should be done with a plan, not just randomly. But a lot of this is going to do with the type of relationship that you have with your advisor, whether it's calling a 1-800 number and speaking to someone in some strange part of the world, or doing everything online and running it yourself, or having the type of relationship where it's an ongoing sort of dynamic planning process And again, I'm not saying people shouldn't do financial plans. I really think a lot of people should. But for many people that we talk to, they're able to get everything set up, plan in terms of their income and their expenses, and then set up a portfolio that makes sense. And at certain points in their life, that's when we'll dive more deeply into a specific financial plan. But I don't think people, if you're a cross-border investor living in Israel, you don't have to feel overwhelmed by the whole financial planning process. You can just get your affairs in order and make sure everything's set up before you necessarily dive into the plan. So that's I just wanted to touch on that before we get into some of the specifics of actually how do you open the account when you live outside the United States.
I can't tell you how much it really helps the people that actually have their financial planner or their accountant in Israel, because now they've moved across the ocean. There's a 7, 8, 9, 10-hour difference, and they have somebody that they can call up locally and they can get answers right away and not have to wait until their accountant or their financial advisor wakes up.
So let me tell you what the steps are that you're going to get involved in if you're opening a U.S. brokerage account when you live in Israel. In fact, if you've done it recently or anytime, well, if you've done it recently, it's probably going to be similar. But if you've done it in the past, you'll see that things these days are much more streamlined. The number one thing that the brokerage firms are concerned about these days is just identifying the client. So we're always going to be asking for a copy of your passport, which needs to be, as we say in Hebrew, in tokef, right? It has to be up to date. It can't be expired, or any sort of government ID that's going to show who you are. Also, if you want to add someone onto your account, giving him trading authority, so we need to know who that person is too, and you have to be able to prove it. So depending whether you're a U.S. citizen or not, you're going to have to show proper government ID. You may have to show a copy of a utility bill just as evidence of your address. But even if it's in Hebrew, we'll accept these documents in Hebrew. In fact, it's often funny because when I mention the compliance officers in America, they'll often ask me, well, Doug, I can't read this document which you sent, and then I'm able to sign off on it as the resident Hebrew speaker. So that's the first thing you're going to do. The second thing you're going to do is you're going to have to sign either a W-8 or a W-9, depending if you're a U.S. citizen or not a U.S. citizen. This is just telling, it's a little more complicated than this, and you can ask your accountant about it, but basically it's saying a W-9 says I'm a U.S. citizen, a W-8 says I'm not a U.S. citizen. I will note that probably if you're living here, your Israeli banks might have asked you to do this. Make sure you sign the right document. As you may be able to tell from my accent, I am a U.S. citizen. When I went into my bank and had to sign this form, the clerk insisted that I sign a W-8. I said, what are you talking about? I'm not an Israeli. I mean, I am an Israeli, but I'm an American. We had this long discussion until finally I insisted they bring their manager and call the compliance officer. So it may sound simple enough, but you should know that not everyone is even aware of this regulation. Once the account is set up, and by the way, it could be an account in your own name, or if you have a trust or an IRA account, you're going to need all the basic information. And then inside that account, that's when you'll be able to start the investing. If, like we said in the beginning, you've been kicked out of your Wells Fargo or Merrill Lynch or Morgan Stanley, normally what we do is we simply transfer the assets over and then continue from there. So it's actually a pretty streamlined move of assets, and it's relatively simple. And you get the benefit then of working with someone who is local and hopefully who gets to know who you are. So I think the bottom line is that it's very important to, in dealing with cross-border finance, to work with a cross-border investment advisor. It's a specialty, and I mean, I'm not the only one, but make sure that the person you talk to really spends the time to get to know who you are and is able to work with your other professionals as well. Ron, I've talked about a lot of things, but I think I want to make sure that we have time not only to talk about opening U.S. investment accounts when you live outside the United States, but there are a number of tax issues which I think are just, they always come up in conversations with clients. So maybe we could spend a few minutes talking about that and then deal with some of the questions.
Sounds great.
Yeah, I just want to dive in, and I know that you had a few things you wanted to say, but I just wanted to point out that probably the most common conversation I have with clients is they say, how do I handle my U.S. tax return when I have a U.S. brokerage account, but I live in Israel? What are the main things that I need? So I guess that maybe you could start with that.
Sure. Actually, the first thing I want to make sure is people understand that they're U.S. citizens, no matter where they live in the world, they're responsible for reporting their income, their worldwide income, to our friends at the IRS. And the thresholds are pretty modest. And to the point, if you're married filing separately and your spouse is not an American citizen, if you made more than $5 of income during the year, you have to
Sorry,
file
$5?
$5. For
Wow.
2023, that is the threshold. For someone that's single, roughly about $13,850. Somebody that is married filing jointly and their spouse also is American, 27,700. So the threshold is not so huge. So in essence, roughly anybody that's a U.S. citizen, bar maybe a student, is probably got to have to file a U.S. return.
And that's just the basic year. I mean, you're talking about just a
Correct.
1040 form.
Correct. And then in addition, we've got something called an F bar. And that's if you have financial accounts outside of the United States that aggregate at any time, could be for 5 seconds during the year, $10,000. So let's say about 33, 34, 35,000 shekels, depending on the average exchange rate for the year. Most people are going to get to that because that includes your bank account here, Kupat Gimel, Karen Hishtalmut, Bituach Minhalim, Karen
Anything,
Pensia.
sorry, just to clarify, that's any account you have. What about if does it matter if it's joint account or not?
No, it doesn't matter if it's joint and your spouse is not a U.S. citizen. They are on the hook for it. And what happens is it's all the accounts added up together. So if let's say one account has 5 shekels in it, if the other accounts go over together, all the accounts are included. And in addition to that, even if it's not your account, if you have signature authority, let's say you're a volunteer for a charity and you have the ability to move money and sign, even though we don't use checks so much, you have signature authority on the account. You also have to include it on your FBAR form. You specifically tell them that this is a signature authority account. It's not yours, but you have the power.
Wow. Well, one of the things I know people talk about a lot is that you have to tell the IRS the highest value of that account in the year.
Correct.
And I was talking to a client recently who bought a house, and so he needed to sell like $1 million of investments in the States, so he took care of that, and then we wired the money to his Israeli bank, and then he used that money to buy the house. And he asked, well, I don't really have the money; it was just to buy the house. Do you want to comment on that?
Sure. I'm going to actually make even a more extreme case, because in the case that you just gave, yes, you absolutely have to include that amount on your FBAR. Let's say it's not even your money. Let's say you got a loan, you got a mortgage from the bank, and that money comes into your checking account and goes out. It was there for 5 seconds. You have to include that amount on your FBAR. It does not matter if it just passed through. That is a absolute must. And one of the things that people have to take into account is there's something called FATCA. And what happens was the banks ask you to fill out a W-9. And from that W-9, the banks are giving information to the IRS on the highest balance in the account, the interest, the dividends, and the capital gains inside those accounts. So the Israeli banks are reporting to the IRS. There are some exceptions for extremely low accounts, but you have to assume that the banks are giving all the information and that you are not in the accepted group.
Got it. So let's just go over the penalty. Is it corporal punishment if you don't file an FBAR?
It depends if you're willful or non-willful. There's a whole bunch of cases. It can get pretty bad. It can get for 10,000 account, 100,000 for a misstated FBAR. It all depends on the situation, but it's not something that I would want to get into.
So one of the things I just often bring up with people, it's just a reporting form. You just have to tell them you're not paying tax on it. So don't be afraid of doing it. Just do it carefully, because otherwise, I mean, I guess short of corporal punishment, they're definitely.
I've had people where they've actually transferred money from account A to account B to account C, and it looks like on their FBAR that the money, it looks like they have a lot of money, but that's the way you have to do it, and there's no tax on it, but not to be afraid of it.
Got it. So how about when people invest in Israel. In other words, they'll say, so why don't they invest in Israel? And then it becomes an issue. I know when they want to buy Israeli mutual funds, which
Sure.
when they have an American brokerage account, they always buy ETFs, exchange traded funds or mutual funds. These are normal things. And then, as we were talking about getting in trouble, can you?
So this is an absolute hot topic. If you go to your bank and let's say in Israel and you have 100,000 shekels, the first thing that they're going to probably put you into is a mutual fund, Keren Nemanut. And that for an American is not illegal, but it is absolutely a costly mistake. You do not want to be there. The reporting requirements are absolutely terrible, and the tax implications can be even worse. I've seen where somebody had lots and lots of income for selling it, and 60% of that income went to pay the tax and the interest on it. So
Wow.
if you do not want to go there, if you're an American and you want to invest in an Israeli bank account or an Israeli investment account, you can go into pure stocks, bonds, bank deposits, and some ETFs. Most ETFs are also considered what we call a PFIC, and you want to stay away from. And also the insurance companies have products that most of those are also what we call a PFIC, and you want to stay away from them. It's just not worth it. Again, it's not illegal, but you want to stay away because the tax implications can be absolutely horrendous.
Right. I often joke with people. Do you remember when we were young, there was a gum called Trident gum? And it was
Sure.
sugarless. And they used to say 4 out of 5 dentists recommend sugarless gum for their patients who chew gum. And my dentist used to turn to me and goes, I want to know who was that 5th guy? Who was that 5th dentist who told his patients to chew sugarless gum? And I feel it's the same way with accountants. I was speaking to an accountant once, and we were talking about PFICs, these passive foreign investment companies. And he said, no, it's great when the clients buy this stuff. He says, you have no idea how many more hours I have to bill them for it. So it's just nuts. It's not only is it expensive and a pain in the neck, and I know the accountants hate doing it because it's really a pain.
Correct.
It just doesn't make sense. But then there's the opposite side, and maybe you can just touch on this, which, a lot of American, or when people make Aliyah, right, they get a tax holiday in Israel. But then eventually they do have to start paying tax in Israel. What
Correct.
happens with their accounts in America? How does the Israeli government look at taxing that?
Sure. After your 10-year holiday is up, your interest and your dividends, your capital gains, your rental income is taxable here in Israel. So interest, dividends, and capital gains are taxed at 25%, and rental income could be either taxed at regular rates or it could be taxed at 15%. But if you take that route, you're not going to get a credit for U.S. tax. So for example, if you have interest in dividends from the States, the first rate to tax it is in the United States. So let's say you paid, as an example, 10% tax to the States. The tax in Israel is 25%. You'll pay 15%, the difference, to Israel. For capital gains from the States, it's actually the opposite because of the treaty. The first right to tax that capital gain is to Israel, which is 25%. And most times, if they're long-term capital gains, they'll be taxed in the States at either 0, 15, or 20%, and you'll get a tax credit for the taxes you paid in Israel, and you probably won't pay the States any additional tax. There are some situations where that's not the case, but that is the majority of the cases.
So in other words, there's 3 ways you can make money: dividends, interest, and capital gains. Let's take rent off the table. I'm just talking about it in a brokerage account. Dividends, interest, and capital gains. You'll pay tax to the U.S. on your dividends and interest, but on your capital gains, you'll pay that tax to Israel first. Israel gets the first bite.
Correct.
And does it go the same way, the opposite? In other words, let's say you have a stock in Israel, and it pays a dividend.
Sure.
How do you pay the tax?
So what will happen is you'll pay the tax to Israel. Israel actually will take the tax directly from your investment account or your bank account, and generally that's 25%. And on your U.S. return, you'll report the dividend and you'll take a credit for the 25% tax that you paid in Israel. Same thing with interest, same thing with capital gains.
Got it. So a lot of times people talk about the U.S.-Israel tax treaty, and they say, that's what covers you in terms of double taxation. Now, I know, I mean, looking at complex cases, I've seen, where people actually really do have a risk of double taxation, but
Right.
normal people, and let's say the normal people just listening today, are there, like, do they have to worry about this, or can they pretty much say, I've got my brokerage and IRA accounts in America, and I've got my bank account and my Karen Hishtalmut and my Kupot Gimel in Israel. I don't have to lose sleep over double taxation. Is that fair?
As long as you use somebody that understands how the treaty works, because we've seen sometimes where somebody is using a tax accountant in the States and they don't understand, for example, on the capital gains, they give first right to tax to the States. That is an absolute disaster because the Israeli tax authority, Mas Haknasa, if you go to them and tell them that you pay tax on your capital gains to America, they'll say you basically have volunteered that tax to the States, and we're not giving you a credit because of the treaty. We get first right.
Wow.
So that is crucial.
That's a huge mistake. Also, similarly, I think regarding Social Security, right? There's a huge benefit to make Aliyah if you're getting Social Security. How does that work?
So if you live here and you can take, there's a position in the treaty that your Social Security income is exempt. It's an amazing benefit that only exists for a couple of countries in their treaties, and Israel is one of them.
Got it. So that's cool. So, and that's actually, I think I've seen that mistake also, is people who really, and again, I'm happy when they love their accountant from America. They may have worked with a guy for the past 40 years, and then they make Aliyah when they retire, but he's just not familiar with it. And then all of a sudden I'll see and I'm not a tax expert, but when I glance at their tax returns from looking with investment eyes, and I see that, wow, they've been paying tax on this for years.
Yeah, unfortunately, I've seen that many, many times, too numerous to count.
Wow. So are there any specific strategies that people should, let's say on day one, or when they're just, now they're going to walk away from this discussion, they're going to say, well, let me just take a look, what's the number one thing maybe they should think about?
So I have a number of strategies. First is you may want to consider investing in growth stocks. So in those stocks, they don't pay dividends, so you're not going to pay any tax on them. And you only pay the tax when you sell the stock.
And you pay that tax to Israel.
Correct.
Right. So it's also a good Zionist thing to do. Okay.
The second tip is not reinvesting your dividends. And the reason that I say that is there's a lot of times where people will get dividends and they'll reinvest them and they'll say, why should I have to pay tax on them? And what happens is the stock says, here you go, here's your dividends. And you say, no, thank you. But both Israel and America say, no, that is a dividend and that is my tax. Same thing when you buy and sell stocks. That is my money. And what I tell people is if you don't reinvest the dividends, you can use the money to pay the tax and you don't have to bring the money from the outside and you can enjoy the rest of the money, the other 75%. So that's a strategy. Third thing that I want to give people as a strategy is make charitable donations. In Israel, there's a 35% credit, and that is even better than in the itemized deduction that you get in the United States.
And on top of that, actually, we've been dealing with people since this very, very new ruling about donating appreciated stock.
Correct. But that you must get proper advice because there are pitfalls there.
Yeah, we've seen that. But just to clarify, this is something that, I mean, when I started in the business over 30 years ago in the States, we were doing this already. This was a common thing, which was if you, let's say, buy a stock for $10,000 and it grows to $100,000, if you sell the stock, you have to pay tax on that profit. So if you say, I want to give that to charity, so you sell it, you pay tax, now you have less money and you give that less money to charity. Now, in America, they had a good deal, which they now have in Israel, which you could literally take the stock itself, donate that stock to the charity, and you get a deduction for the full $100,000. In other words, a charitable deduction. Plus, since you're not selling it, you don't have to pay that capital gains tax. So,
right, but it has to be given to an Israeli charity.
So but there are systems for it. It's a new tool in our a new arrow in our quiver.
Correct.
Really from a new rule.
I have two more tips.
Yeah, great.
is management fees. If you pay management fees, even though they're not deductible in the States until after 2025, unless Congress changes the law, in Israel, they are deductible, a one by one. If you have, let's say, $1,000 of dividends and $250 of management investment fees, you have $750 that'll be subject to tax here in Israel. Same thing with accounting fees as well.
That's a good way to save some money. Okay, and what's the last
Absolutely.
strategy?
The last one is to make sure that you're harvesting capital losses against capital gains.
Can you explain what that means?
Sure. Let's say I have a nice amount of capital gains in my investment account. Let's say I have $50,000 of capital gains, and I take a look at my account with my investment management advisor, and we see that I've got some stocks that have losses that I haven't sold yet. Let's say I'm looking for $40,000 or $50,000 of losses to offset the $50,000 of capital gains. So in that case, let's say I take $50,000 of losses from the capital gains, I net them together, and my tax on that will be zero because I have 50,000 of capital gains. And now that I've sold stock with $50,000 of capital losses, I have no tax burden.
And so if that's a common strategy, we call it tax loss harvesting. Is that something you can do cross-border? Meaning, let's say that you have a U.S. brokerage account with $10,000 of realized gains, meaning you bought a stock, you sold it, and you made $10,000. And in Israel, you lost 30,000 shekels. Can they offset one against the other?
Absolutely.
All right. Wow. Well, those are great and important strategies, and people should. I hope they're taking notes or listening or speaking to their advisors or either to Ron and me about this. Ron, there's some questions. Can we dive into some specific questions?
Sounds fantastic.
Okay. The first one's okay for me. What happens if I die? I'm glad he continued. Well, you should live and be well. How will my U.S. accounts get distributed to my heirs? So, great question, and it comes up all the time, mostly because my clients are older, so they're often worried about this. It's important to think about it. In general, if your only asset in the U.S. is a U.S. brokerage account, so, and I can't speak for every brokerage firm, but I can speak for ours, we'll accept an Israeli will. So you don't need like two wills. If you have an Israeli will, we're going to want to see it in English, so you have to get a certified translation. But other than that whatever you say in your will is what's going to happen with your U.S. brokerage account. If you have a trust, by the way, a lot of our clients open up trusts, so we just follow the trust document, whatever it says. Whoever is the new trustee takes over and gives us instructions. So it's relatively simple. It's a little more complicated if you have real estate in the States. And obviously, I'm not giving tax advice or legal advice, but just practically, we're the ones who deal with like when someone dies, the lawyers do all their stuff, but then someone actually has to deliver the money to the heirs. So we're the ones who usually do that. So that's why we're familiar with it. I often tell people when you're working on your will or your trust, if you're a client, just show me a copy before you finalize it, because I'll let you know if it's something that's normal the way we work on it. And every so often, there's something a little weird, and we tell them to correct it before it's finalized. So it shouldn't be a big deal as long as you again work with a cross-border lawyer who understands it, and run it through your accountants and your financial advisors. Do you have anything to add to that, or I have a question now?
No, I think you did great.
Okay, the tax question. How are U.S. pensions or IRA distributions taxed for an American living in Israel?
Sure. So if you have a 401k, a 403b, or an IRA account that you put into as a result of working before you made Aliyah, those accounts are taxed in Israel at the same rate that you would have paid it in the United States. And because of the treaty, Israel has first right. The great part about it is you pay no more tax than had you had paid in the States. So you are tax neutral. And what you do is you give the tax to Israel, and you take a credit on your U.S. return. So you're in great shape. Now, for pensions or IRAs that are inherited, that is a different story, and it gets a little bit more complicated.
So let's keep it simple. I just want to clarify that what you just said about the first. So normally, and again, I'm just talking about, I know there are a lot of exceptions. We deal with a lot of exceptions, but I don't know, 60, 70, 80% of the cases are someone retires to Israel. He's got an IRA account. He hits 73 years old and he has to take required minimum distributions from that account.
Right.
So there's normally some withholding because the IRS requires people outside the US to have withholding on their distributions. But at the end of the day, when the accountants balance everything out, you're saying if he may get a return if he overpaid, he shouldn't have to pay more than had he just stayed living in the United States.
Absolutely. It just, the tax goes to Israel instead of the United States.
Yeah, good. Another Zionist move. How did our treaty writers? It's an old treaty, right? It was written a long time ago.
Absolutely.
So they thought of that. Okay. Oh, another tax question. Okay. We should probably wrap up soon because I don't want to go too long. But can you explain how income from U.S. and Israeli real estate investments are taxed for U.S. expats?
Okay, so let's talk about first rental income from Israel. Israel has first right to tax that, and Israel will either tax it at zero if you're under a certain threshold, which is roughly about 5,000 shekels a month, and this is residential rental, or it might be taxed at 10% on the gross, or it'll be taxed at regular rates. And then the United States will come in and they will tax it at regular rates, and you will get a credit for any Israeli taxes that you paid on it. Now let's go talk about the opposite direction, rental income from the United States. The US has first right to tax it. And also, if it's in a state that taxes, which is most of the states, they have first right to tax it. On your Israeli return, it'll be taxed at regular rates and you'll get a credit for the US and state taxes paid. Or there is a second option where you get the option of paying 15% on the gross rents minus depreciation, and you get no credit for federal or state taxes.
Got it. So there are a lot of choices that you have to make. And I mean, how do you...
And one of the things is on each rental property and every year, you have the option to choose. So you can flip-flop between properties and also between years.
So there's a lot of strategizing. Like, in other words, every year you have to strategize about your real estate. And I'm asserting that it also would relate to, let's say you're self-employed and you own your own company. You may decide whether to accelerate income in one year or the other, or to take it as a dividend, depending what's like. So at what point should someone think about these calculations? You know what I mean? In other words, every year you have to think about this. When in the year should someone...
When should they do it? Let's say the year end is December 31st. I would say sometime in January afterwards. They should have someone do calculations.
Got it. And what if they're a business owner? Because they may have to take
business
money out.
owner, then they may need to do it on a current basis.
Got it. Okay, so that's probably, I'm guessing it's not most of the people here, but it's just important to realize that if you own real estate, especially a lot of real estate in the States, and you definitely have a more complicated situation rather than just having a bank account or something like that.
Correct.
Got it. Okay, I don't want to go on too long for people, but maybe we should just give people the opportunity to contact us, and then we'll wrap it up. How's that?
Sounds like a great idea.
Okay, what's the best way for you?
They can send questions to me at ron@aboulafia.co.il. Aboulafia is ABOULAFIA.
Thank you for spelling that. It's just, never sure.
It's a mouthful.
You can get in touch with me at Doug, D-O-U-G, at profile-financial.com. Wow. Okay, we covered a lot. I hope this was useful, and I look forward to speaking to you again soon.
Sounds great.